development, delivery and management. He formed and built GBST, of which he is the founder, into a significant company, which is a public listed company now, into a significant international systems provider to capital markets, including various stock exchanges, with operations in all key time zones. During this time, GBST developed a good reputation and as an innovator, bringing many firsts to its clients, and the clients included the who is who of capital markets. And some of these technologies include STP, real-time portfolio, WFM, smart contract validation, evaluation, online trading, multi-entry and multi-jurisdictional ledger, to name some. GBST platforms today interact and transact over billions of dollars every day and manage in excess of $500 billion under assets under management. John currently chairs multiple committees and multiple companies, and he chairs Over the Wire Limited and Tanda Limited. Both are IT service companies. He has extensive experience in governance in the non-profit and higher education sectors, and he is also affiliated with the Queensland University, Australia. We are pleased to have John's skills and unstinted support available to us full-time during the formation stages of our startup Himalaya Capital Exchange. And I can personally vouch that John is one of the very rare people in the world, and those of which include the likes of Vitalik Buterin and Nick Szabo, who have far exceeded my expectations from a human being in terms of competence, in terms of intellect, in terms of knowledge and unstinted support and even humanity. So his compassion and his considerate nature and his absolute magnanimity and generosity of spirit. These are exceptional characters that I find in very few human beings, like I said, the other two being legends. So I'm introducing a legend to you. Thank you.
Just looking around the room, it's pretty obvious that I'm the eldest guy in the room here, so I think my task today is to actually put an historical perspective into the relevance of blockchain and to some extent explain why I'm excited about it. I flew 10,000 kilometres last night with Arun to be here. Not because, well, one because I do like India. I love coming to India, so does my family. My family, two of my daughters were here last month, my wife's here next month. So we love coming here. But I came out of respect for Arun, a man who I have always rated. In fact, I rate him as one of the brightest stars on the planet. Arun introduced me to Arifa, and I've got to say, her infectious enthusiasm, her vision, her commitment to what she's doing here and where she's going. I think we all knew that there was a place for blockchain in capital markets, but Arifa has managed to articulate it and put it, not only articulate it, but put it into a campaign that I think is mind-boggling what you've achieved. So thank you for your warm introduction, but it's a great pleasure to be here. And I must say, just because I really rate this book, I've got to tell you guys, if you haven't read it, there's a book about India called The Farthest Field by Raghu Karnad, which I read 3 or 4 years ago. I think it only came out 3 or 4 years ago, but if you haven't read it, it is it's an excellent example of Indian literature, and it certainly put India into perspective for me reading, into a new perspective, I should say, for me by reading it. So I'll just give that out to you. I just want to do a little poll. How many people consider themselves code cutters in this room here? Code cutters. Does that ring a bell for anybody? I'm a code cutter, but I'm an original code cutter. And by that I mean we used to cut code into punch cards with punch machines that weren't even electronic to fit into a 32K machine. And we used to run billing and debtors systems and all sorts of things off the back of that. These were in the days when there were only 10 computers in the town that I lived in, 10 only in total, which ran the commerce of the city and obviously ran some of the banks and some of the other government agencies. And on those, what you would consider to be nits of machines today, micro machines today, we were able to conduct commerce, electronic commerce, I'd call it. I wouldn't necessarily refer to it as electronic commerce. But we got them all to work, and we had a lot of fun, and we did a lot of cooperation, and we had to make some new rules, and we had to bend rules to make things happen. People didn't understand us. And I must say, I chose to sacrifice an accounting career, easy choice, to be a code cutter. And we got there. And why I say that, it's not to skite about being a code cutter, because I mean it's a lot easier to do, well, it's a lot harder to do computing today. But it's an example of where a disruptive technology is a foundation for the future. And I think in essence what we're talking about here today is the impact of a disruptive technology, not just on our lives, but on a particular aspect of our lives, being capital markets, that are overdue, with all due respect. And I earn my bread and butter out of capital markets, so it's difficult for me to be critical of their current status and also talk about a disruptive activity. But it's time that the capital markets faced some of this new innovation that's coming. As Arifa said, over the years we've chosen to specialise, and it's some 30 years ago now that we started to specialise in back office systems for capital markets. So we support both the sell side and the buy side in capital markets. We do have stock exchanges as customers, particularly in Asia, but in essence our main footprint is around the edge of stock exchanges, so around the edge of depositories and exchanges, allowing big banks, big institutions, big fund managers, big funds, big investors to play the market, provide order flow into the market, and then book the resulting order flow, book the resulting trades that come out of the order flow. And if we're a specialist in anything, we're probably a specialist in the flow of the explosion of messages that come off the back of a trade on a stock market. Because typically one trade on the stock market will break out, as some of you will know, into 20, 30, sometimes 50 or even more messages just to get the deal done, and that's on T2. So there are many parallels to what I've experienced over the capital markets and that I see today for blockchain. So in terms of the capital markets, the current situation is characterised by massive markets, as we know, and typically they're transacting tens of billions of dollars a day, but they're surrounded by gatekeepers, specialist service providers, information services, regulators, as we've been discussing, huge investment funds and huge investors, incomprehensible rules and methodologies, disparate proprietary systems. Each player's got a different system in the game. Systemic risk as a result of that. Interdependence, many points of failure, and where failure, even though it doesn't hit the press, failure is a regular occurrence in today's capital markets. They're good at dealing with failure, dealing with the correction of failure. And also high friction costs. And I could go on. These markets have become top-heavy, complex, and populated with old systems and flawed governance. And again, we've been discussing that this morning. They are discontinuous, reflecting their old batch-orientated heritage. Now, they're big markets and they pretend to be online real time, but in essence, they are batch-orientated systems, many of which were built 20, 30, 40 years ago. For those of you that are connected to the market, you'll know that there's an overarching message standard called ISO 20022. Has anyone had a look at that recently? It's got a meta language for you to even get down into it. It's a superset of Swift, Fix, OMGO, Euroclear, and so on and so on. Deutsche Bank have got their own message set embedded in the thing. So there's even messages in the message set to inquire about other messages. This is where capital markets are at now. They're basically a huge messaging system with its own momentum. A recent example of errors, and you might have seen this, some of you people that are active in Asia here, it is in Korea, South Korea. It started with a $105 billion blunder, virtually a clerical blunder, and then it got worse. Someone at Samsung Securities, one of South Korea's largest brokerages, was trying to pay employees a 1,000 won, that's 90 cents in US dollars, per share dividend for an employee share scheme. Somehow they gave them 1,000 Samsung securities, like billions of dollars worth of securities that didn't exist. And the crisis came when someone tried to realise them, turning into cash, because they didn't exist. These are the sort of errors. Now, the market is good at accommodating these errors and fixing them up, but they're just as error prone as the sort of things we've been discussing here with crypto. So what was intended to create fairer dealings has become a headless giant that really no one has complete grasp of. There are knock-on effects across the whole system from relatively minor disturbances. They are costly to supervise, and hence there are significant friction costs, as I mentioned. Just for example, the top 10 global investment banks made nearly 50 billion in fee income alone in 2017 from IPOs. So it's like these people never got the memo, right? We've all gone to 24/7. They're still doing 10 a.m. plus 4 p.m. 5 days a week. So there's a long way for them to go, and they're still keeping gentlemen's hours. So, but I think the largest negative of the current capital markets landscape is that they're too big to fail. And of course we know that from the global financial crisis. We really immediately wrote off $2 trillion in asset value, and they're still cleaning up from the last global financial crisis. So I say this as a caveat to what we're discussing for blockchain and its impact on capital markets, because no one is going to allow these entities to fail. They're going to continue. Because the capital markets, amongst other things, and particularly for the regulator and particularly for the government, provide a barometer to the health of the economy. So even with all their difficulties, they are still a key element in economic activity and an economic indicator. But as we know, and the reason for their existence, money flows in a manner that's similar to water. It follows the path of least resistance, and it chases the best risk-weighted returns. As Arifa says, unstoppable capital is seeking better returns and less friction. The arrival of distributed ledger technology and the strengthening of it with smart contracts makes it inevitable that these technologies now find their way into capital markets, where speed through execution and settlement, easier and continuous access, transparency, trust, certainty of delivery, lower cost, traceability, scalability, risk alleviation, and so on, are good drivers for change. These automated methodologies are now well proven, and there are many other advantages, so change is inevitable. In many respects, the distributed ledger technology always seemed destined for capital markets, and like most other disruptions due to digital technology, I expect ultimately there will be massive shifts of capital from the old model towards the new model. Dematerialisation of stocks from the digital registers arose as the primary recommendation following the large crash of 1987, where the market tumbled 20% in a day. That's some 30 years ago, and in those days the settlement cycle was something of the order of T plus 20, transaction day plus 20. We've managed to get the settlement down, and was mentioned this morning, to T plus 2 or thereabouts. That's one order of magnitude in 30 years. You could call that progress, but really it's not good enough, and it's certainly not good enough in an electronically enlightened market and marketplace that we're used to today. Note also that each day saved in the settlement cycle has a massive upside effect on the liquidity of the market and the marketplace. So the process of systems revision in capital markets is now happening in earnest. In my domain, back in Australia, the ASX has announced an implementation plan and for the evolution of CHESS, which is the settlement sub-register, and moving that across to the DLT platform, and they're using a contractor called Digital Assets to provide that. And interestingly, they have taken an equity position in digital assets. In fact, I think they've had two. They went in initially and they've topped up. This is a small, so it goes towards verification of this as a model. That's the reason that I make the point. This is a small step but in the right direction. Notably, ASX has avoided addressing the most obvious function for applying DLT to the trade matching. And again, we discussed that this morning. The trade matching market will continue to operate under the current model. Maybe there were doubts about DLT operating throughput at current trading levels, or that too much change creates too much risk. But the bad news for markets is that doing nothing is also high risk in this context. So I'm sure you're aware of many other projects attempting to embrace DLT in some segment of capital markets. None to my knowledge have got there yet, and many are niche in scope. In some, and indeed some of them have been discontinued following the investigation stage. These days, and that was the point of my question earlier this morning, these days new capital is often formed by some form of intellectual property, a discovery, a better business model, a new technology, or a breakthrough idea. These discoveries can quickly become orphans due to lack of capital, arising from poor parents who have taken the headline risk to innovate and have exhausted their resources and their energy. These ideas then often die at the gate due to that exhaustion, and they are crying out for sponsors. We know that the sponsors are around, but the access and the access cost and the access hurdles are too great. Not anymore. DLT makes it possible for these new ventures to survive with initial and ongoing capital raisings that don't involve substantial fees leaking out and to support the costs of conventional raisings. Current capital markets are not suitable for these primitive, young, let's call them, companies to raise capital. So we do need a fairer and simpler system. I remind you that DLT has been around now with us for a decade or so and is well proven. DLT, smart contracts and cryptocurrencies bring so much more to the startup marketplace. Instant matching, delivery and settlement as a single instance. Pre-validated counterparties and asset ownership. Smart contracts that both sides of the contract understand and can read and validate. Immediate settlement, which has a consequent effect on liquidity. Unifying and common methodologies between the parties. Platforms for smart contracts allow new listings to do their own raising. They don't need an advisor necessarily. It eliminates inter-party messaging and the consequent errors that flow from inter-party messaging. And particularly they are multi-instanced, so there's no single point of failure, and they're available as a result of that across all jurisdictions. So for the new millennials, this is their preferred way of dealing. Just look at what happened at other markets like mail, books, photos, video, cab rides, hotel rooms and so on. Once you can transact on a digital platform, new entrants arrive and the markets grow rapidly. Eventually the older models catch up with the new paradigm. Ultimately there is a snap effect and everyone crosses over. The extraordinary success of Bitcoin is testimony to this. Bitcoin has made it in spite of all the naysayers, regulators and defensive market forces running against it. Why? Because ultimately it's following the path of least resistance towards the promise of better returns. It is trusted, relatively fail-safe and easy to transact. Investors understand the rules around Bitcoin. It is directly accessible from a browser or phone. In a sense, you can carry it with you and transact wherever you wish. I believe that DLT is the next phase in the evolution of the capital markets. It's an exciting prospect. We now stand on the shoulders of giants who've gone before us. To those who dematerialise stock and shortened settlement cycles, they have built large trading houses and invested in great companies. Those who have pushed the computer science around transaction management leading to smart contracts and DLT, we're indebted to them all. They've allowed us to see a better way, and we can put a new head on top of those shoulders and we can now see the next frontier, which is the sort of thing that Arifa is doing. Rather than re-engineer and disrupt current markets, I believe this would take too long, even if it is doable, which I doubt. It is my belief that the new markets, such as the one proposed by Himalaya, will grow new capital from new raisings and ultimately attract old capital away from old style markets. The disruption will occur steadily and will be driven further by innovation, and ultimately there will be a snap effect once the new mode has been legitimised. So it's with these thoughts that I, from a lifetime of experience in supplying systems to assist the capital markets, that I'm delighted to be able to offer my support as such as it is to Himalaya Capital Exchange, and is why I'm here today. It's why I've made this journey. This could be a winner-take-all scenario. Everything looks right. It's the right ledger, DLT, non-proprietary. It's got the right heuristics. Smart contracts is an established science now, and good scripting languages that allow users to understand and trust what's going on. We've got the right structure, a democratic and open and transparent structure, and the right business model, available and open to all comers with no gatekeepers and zero fees. it's the right time, and I think it's the right opportunity to democratise capital markets. Money always flows along the path of least resistance towards better returns. That's the universal law of money. Someone is going to win this game and make the world a better place, and it could be someone in this room. I think it's highly likely that it might be someone in this room, and if not, it sure could be someone in India. It's a dynamic young country in an old place with a lot of intellectual capability, and this could be the place where it starts. So thank you very much for having me. I've enjoyed being here.